From one user 100xing his money in a day to another user trading himself into debt, we're going to go over the craziest Wall Street Bets trades we haven't talked about over the years. Gemini of Wall Street is a user who YOLO'd into calls while he was under the influence, and things went interestingly. It was a Friday before a 3-day weekend, and he said he just took a real difficult exam. He went back home and got absolutely blasted before he started trading, which is always a smart idea. He looked at the upcoming earnings releases for the week and saw that good old Walmart was going to have their earnings call the following Tuesday. Costco had a pretty solid earnings report just before this, and that was all Gemini needed to see before he YOLO'd on calls. He typed in wall and quickly bought 100 calls. He put his phone down and went about his day as usual. Not really too worried since he still had the weekend ahead of him. But eventually he realized, hey, Walmart's ticker is not Wall, it's actually WMT. He just bought 100 calls of Western Alliance. He didn't buy Walmart calls, he bought Wall March 15th calls. That being said, he eagerly waited for the weekend to be over so that he could sell these calls that he didn't even want in the first place. When it finally opened on Tuesday, he decided not to sell these calls, but actually FOMO into 100 calls on Walmart for real this time. He was already down quite a bit on Western Alliance, but it was all good since he knew he was about to bring in that gravy with Walmart that night. The only problem was that Walmart was up quite a bit, so he bought at a fairly high price. And just cutting to the chase, here's the aftermath. Gemini of Wall Street wants everyone to learn the importance of double checking the stock ticker before you hit that buy button. Tanner Bayer is a user who mainly uses Reddit to help him sell real estate, but on one special day, he got a gain so delightful that he had to post to Wall Street Bets. It was December 19th back in 2023, and Tanner had been day trading NASDAQ 100 futures consistently since his main job as a realtor was pretty slow that year. He felt like the market was due for a correction anytime soon after its strong rally through 2023. He crafted some technical analysis, and that was all he needed to throw money on 0 DTE puts. The index thankfully didn't rocket, but it did go up a little bit for the day with a 0.5% increase. He sold for an $1,800 loss, but still felt confident the market was due for a correction. So the next day, he bought even more 0 DTE NDX puts. He spent just about $1,100, which wasn't much, but it was of course a very risky trade that would likely fall in value. He left his place to go do some showings, but as soon as he was leaving, he realized that he was already up 450% with a $5,000 unrealized gain. Not too long after that, this $5,000 gain grew to $12K. Even though he was up 1,100%, he didn't want to sell. He placed a stop loss in case things took a turn, but of course hoped the fall would continue. While he was out showing a lease listing, he looked at his phone and was shocked to see that his $1,000 position was now worth just a bit more than $100,000. His puts were up 9,500% and he sold for a $103,000 gain. YOLOing your whole portfolio on 0 DTE SPY options is never a good idea. All it takes is one optimistic tweet and you'll be heading to your nearest Wendy's to pay that month's rent. But with Imperial Trader Funding, the sponsor of today's video, you can make big trades without risking your nest egg. Imperial Trader Funding is a first-of-its-kind prop trading firm that allows you to trade stocks, options, and more with their money. You put up a small, set amount of capital, pass an evaluation, and they let you trade with up to $125,000 in real funding. This means you can trade with a lot of money, but if things go wrong, you're only out $100 instead of $100,000. It lets you put your skills to the test, and hey, if you realize you're not the greatest trader, you can stop there and you'll have saved your actual portfolio from taking a hit. They let you trade anything from 0 DTE options to complex delta neutral strategies like short strangles or iron condors. You trade, they provide the capital, and you keep up to 90% of the profits depending on the account you select. On top of this, they're giving viewers of the channel a 10% discount if you sign up with the link down below in the description, and a free 10K evaluation to the first 100 people, so be sure to check it out if you're interested. OneMall4203 is a user who has YOLO'd hundreds of thousands of dollars over the past few years, all the way into 2025, and has even met Jerome Powell. Even though this user has blown up his portfolio as recently as 2025, he's actually been blowing up portfolios since 2023. Taking a quick trip back in time, OneMall's first post to Wall Street Bets was one that definitely showed he was in the right place. From 2018 to the end of 2022, he took $20,000 to $334K. then straight back down to 10K. His next post after that one was not a screenshot of his portfolio, but actually an email from his university letting him know that Jerome frickin' Powell was gonna be in the building. He asked the subreddit what he should ask at the event and got responses like, ask him if he enjoys screwing over our calls or puts better, and what he thinks about lowering Ds. Well, the day of reckoning came along and one mall said, Jay shook my hand when I first arrived because I arrived late and I almost bumped into him entering the boardroom. My palms were sweating like crazy, but I think he could tell how scared I was, so he was pretty nice with me in his demeanor. He asked Jerome Powell about inflation and the Federal Reserve's role in reducing it. Well, meeting J-Pow had one mall feeling pretty enlightened, so he went back to trading risky options. Reflecting on his 20 to 330 to 10K journey, he started sharing his trades again towards the end of 2023. On September 1st, 2023, he day traded Tesla puts and made $5,000. And guess freaking what? He was ready to flip-flop it. He got rid of those dumb puts and got calls instead. And these also blessed him with a $5,000 gain only 2 trading days later. He said, I made 5K on Tesla puts Friday, swapped them for calls to make another 5K. This is too easy. And then guess what? He made a post one day later and showed that he was up another $4,800 for the day thanks to his Palantir calls, Coinbase calls, Delta Airline calls, and finally AMD puts. If I keep making 5K every day, I might actually get out of debt in this lifetime. One mall's portfolio was now worth about $22,000, but it only seems like $50 of it was on the sidelines. Someone commented, don't fall victim to the hot hand fallacy. But one mall replied with, no hot hand fallacy. I'm unstoppable. I'm on fire. Give me more of those nose beers. 2 days later, Coinbase, Palantir, and Tesla were all rocketing, so one mall sold his calls that morning for a $12,000 daily gain. He now had just over $38,000 in his portfolio, which is pretty impressive considering it was only worth about $6,000 a week before this. He said, up 15K, not out of debt yet. This led to the natural question, student loans or medical debt? And one mall replied with, nah, gambling loans. I gambled to get in debt and gambled to get out. Well, a week later, it seems like he's not going to be able to pay off that loan. Down $30,000 for the day, and with an unrealized loss of 53K, things are looking rough. This means he made his way up past 60K before this post too, but just lost the majority of it. Don't worry though. He was determined to make his money back in no time. A few weeks later, he made a pretty decent trade on Palantir, where he was up almost $15,000 for the day and had a portfolio worth about 40K once again. But looking at his asset allocation, we see that he is pretty much all in on these calls, so he's definitely still riding on the wild side. After a few more trades, he made his way all the way back up to just about 70K. Mainly thanks to Tesla. Only one day later, he sold his Tesla calls and went heavier on Coinbase. He was down 7K on Palantir, 8K on Alibaba, but up 25K on Coinbase. And only one day after that, he started YOLOing everything into 1DTE Uber puts. This made him a whole lot of money. Psych! This lost him a whole lot of money, and his puts were down almost 83K. Just to sum up one mall's journey so far, he went from 20 to 334K, then straight back down to 10K, then all the way up to 60K, then bang, down to 12K, then up to 90K, then back down to just 5K. But going off of his logic, this meant he was due for an upswing soon, so he quickly got back to trading. He made so many trades throughout 2024, but here are just a few of them. A $15,000 gain on Coinbase puts, another $20,000 gain on more Coinbase puts, and a $19,000 gain on more Coinbase puts. He decided to switch things up on April 10th and YOLO'd $43,000 on 0DTE SPY calls. This was a choppy day for the market, and with only 1 hour left before the market closed, he was down almost 22K. In 30 minutes, Robinhood would automatically sell his calls, and it didn't look like the market was gonna turn green anytime soon. Except it did, and his calls jumped 46K in those 30 minutes. Luckily, he was able to sell for a $24,000 gain instead of a $21,000 loss. He took a long break from posting, but when he came back, he had quite a wild screenshot. Instead of trading on Robinhood, he was trading on Schwab, and apparently, he went from 1K to 25K back to 0, then straight back up to 25k. His switch over to Schwab makes me wonder if his Robinhood portfolio is still with us. He said, thinking I should probably try trading some more conservative things, like 1DTEs or even weeklies. Well, now jumping ahead all the way to January of 2025, we see that he made his way all the way up to over 100k again, but fell all the way down to a nice balance of negative 5,000. Also, his journey up until this point wasn't very calm either. One mall said, I'm experimenting with using quantitative methods to identity trends and trade short-term options. I got to 100k last week and was irresponsible, but now I know what happens if I get assigned on options. Someone commented, you have a gambling addiction and should stop. W. Shea is a user whose trading abilities have put the security of his family at risk. His journey didn't start off this grim though. His first post on Reddit was pretty tame, and instead of being on the WallStreetBets subreddit, he actually posted it to r/stocks. This post was made way back in October of 2019, and he was thinking about quitting his trading journey. He made $3,000 on big tech stocks like Facebook and Apple, but proceeded to lose $8,000 on Parsley Energy. His concern showed that he probably should just throw his money into a safe ETF and forget about it. Instead of buying ETFs, he started looking into biopharmaceutical stocks with upcoming FDA announcements, which we all know are very safe investments. He made posts asking for advice on a few of his, quite frankly, terrible stock picks, and in the mix, we also find this post. He admits that his portfolio is leaking money everywhere, and that even though he's buying the dip kinda just keeps on dipping. That being said, he was ready to move on from stocks, move on from risky FDA trades, and well, move on to the surefire way to make money in the market. Options. 3 weeks later, he got ready for another big trade. It wasn't an options trade, but it was another FDA one. It was December 10th, and he had about $18,500 worth of CORV stock. He asked what we thought about the stock and said that he hoped the FDA meeting didn't make it drop another 40%. The stock closed that day at $1.84 a share, but my freaking goodness, it opened at 70 cents a share the next morning. This was a 62% drop overnight, and he lost $11,500 just like that. He said, lol, 60% down pre-market. I don't think my share's worth more than a piece of now. Note to self, never touch a bio stock before FDA vote, especially when the panel is divided. A few months after that, he made a post asking if he should just sell all of his stocks before things hit the fan, but after that post, it's where things really took a dark turn. This time, r/stocks was tired of his BS, so he posted to the personal finance subreddit instead. This is where he revealed that he not only lost 40k over the past 2 years trading, but that he also took out a 401k loan to average down a stock he was heavily in the red on. Not very many people responded to this post, but the few who did all agreed that he should stop trading and just invest in the S&P 500 or another safe ETF. The story should end here, and it did. For 4 years. When he came back from his 4-year hiatus, he cut the bullcrap and stopped posting on r/stocks. He jumped straight onto WallStreetBets because it was real serious business. He showed us that he was down about 37,000 on Robinhood over the past 3 months alone. But that was only the tip of the iceberg, unfortunately. He lost 37k over the past 3 months, of course, 160k last year, and 250,000 over the course of his trading journey. He said, my third account got done. I have finally lost hope. I will not trade again. Options have killed me. 250k in the hole. Relative Put 4461 said, you were never trading, you were just donating. This is already bad enough, but in a follow-up post to the personal finance subreddit, he spilled even more beans than he already did. He's actually in debt $20,000 because of these dumb trades. He's in his mid-30s and has a wife and kids. Funnily enough, he makes $150k a year and his wife brings in money too, so they could be living a very comfortable lifestyle if he just invested his savings instead of YOLOing them. He has a master's degree, multiple engineering certifications, and works long hours for a consulting company, but finds it hard to put on a happy face for his wife and kids because of his dim-witted decisions. That being said, he quit trading until he has a down payment for a house, and finally realized why people just invest in, say, safe ETFs. Well, things definitely went pretty terribly, but at least he finally learned his lesson, is what I would have said if he didn't post this 5 months later. Yeah, after all that commotion, he still lost another $23,000 over the next few months on what I'm assuming were more risky options trades. On the bright side, it looks like he picked up a second job, so hopefully he wisens up. Interaction Fund 5368 is a user who got himself into $4.4 million of debt right before the holiday season. Back on December 20th of 2020, Interaction Fund made a post titled, "I need help. Robinhood says I need to deposit $4.4 million. He was in a concentrated maintenance call, but how did he get himself into such a big woozy? He started this trading spree with $32K. He was selling puts on DWAC for a couple weeks, and this brought him in anywhere from $500 to $1,000 a week. He then shifted on over to selling puts on SPY. This is when he developed a newfound love for iron condors and selling credit spreads. On Tuesday, he got kinda gypped after Robinhood automatically closed this position for a $9,000 loss. This iron condor closed with both sides out of the money, so he missed out on a sweet gain. The next day, he locked in a $25,000 profit. The next day, the S&P fell and his account dropped to less than $25K, so he deposited another $10,000. On Friday, he started rolling his spreads from December 16th to December 23rd. Halfway through doing this, Robinhood swooped in and put a darn restriction on his account for some reason. They forced him to accept the loss of collateral on one of his trades and didn't let him roll it out. After spending hours talking to support, he ended up selling his position and clearing the call. Interaction Fund thought the coast was clear from here on out, but really the party was just getting started. 4 days after this, Interaction Fund got a kind notification letting him know that he needed to deposit $4.4 million into his Robinhood account by the end of the day, or else they would have him dealt with. Interaction Fund was speechless and felt like he was being robbed since he already sold his position. He consulted with financial experts in the Financial Expert Hangout, aka WallStreetBets. "I need help." He got the help he needed with replies like, "I heard Venezuela has no extradition," and "borrow from another bank to cover that, then borrow from another to pay the other bank off." Interaction Fund left the community with a pretty concerning post, and he didn't give us any updates for about a full year. When he finally returned, he showed us that he no longer had an account deficit, but he also no longer had a six-figure portfolio anymore. What he did have, though, was 6 cents. He gave us a detailed update about what's been going on in his life since the $4 million fiasco, and it definitely isn't very good news. He says that he lost his full-time job shortly after losing his life savings on Robinhood. This forced him to move back home across the country to his sister's house while she is currently raising 4 preteens. He worked a new job that he absolutely hated and moved once again, this time with old roommates. After nearly a year of working jobs that he hated, he finally got a decent one again and is able to start financially recovering again. After this stint of reckless trading, you would think he is done trading forever. And he is, kinda. Not really. He says that he's been investing slowly and steadily, but he's only buying shares and selling covered calls on a singular stock. I'll tell you what the stock was in just a second, but in his post, he says that he is banking on the company becoming cash flow positive by 2025. Just look at this chart showing what happened to the stock 6 days into 2025. The stock in question was none other than Fubo. In his old post, he said, "I think the company will be successful, but we will see. I am the guy who lost his life savings after all." But Interaction Fund never updated us on how his portfolio looks in 2025. He could either be up quite a bit of money or back living with his family again. Swimming Tourist 5632 is a user who got himself into quite the big pickle. He made his first post back on February 15th to the WallStreetBets subreddit. He said, "Pretty big gain this week." But unfortunately, the post got removed, so we can't see the screenshot of his portfolio. It's all good though, cause he made a new post only 3 weeks after that, and things were actually going mystically well for him. On March 7th, he had about $12.7 thousand in his Robinhood account and was feeling pretty darn bearish. That being said, he YOLO'd everything on 0 DTE SPY puts that were out of the money and only left $36 on the sidelines. Boy oh boy was this a risky move, cause SPY actually went up in price by the day's end. But luckily, Swimming Tourist sold before this. In fact, he sold his contracts only 38 minutes after buying them, more than doubling his portfolio. He was up $14.7 thousand for the day. Swimming Tourist felt like an absolute genius now. So, like everyone else on Wall Street Bets, he decided that he was going to push his luck even further and YOLO his whole portfolio on 0 DTE options only 3 days later. Well, it was March 10th, and Swimming Tourist said he woke up late because there's no daylight savings time in Arizona. That being said, the market was already open for about 45 minutes, and it unfortunately opened in the red by almost 2%. Swimming Tourist thought the market was oversold and felt like people were getting too worried about Liberation Day that was going to be happening in a few weeks. He remembered the wise words of Warren Buffett and started dollar cost averaging into calls, getting ready for the inevitable reversal later that day. 30 minutes into holding, he was in the green by about $6,000, but this wasn't quite enough to satisfy his hunger, so he kept on holding. This was a foolish move though, cause SPY resumed its fall shortly after that. Before he knew it, his $33,000 portfolio was only worth $16,000. Even though his contract's value just got sliced in half, he kept on holding. He held until his portfolio eventually hit a value of just $4,000. Down 23K for the day, Swimming Tourist portfolio had officially hit rock bottom. He said, "I'm never buying calls again. See you at 200K. So even though he just lost 85% of his portfolio, he doesn't think options are a problem altogether, just calls. And because of that, he once again YOLO'd his whole portfolio on options the following day, this time on puts. But unfortunately for him, SPY started rebounding as soon as he got these puts. With just 2 more trades, he officially lost it all, with the exception of $9.30. He says that part of the reason he lost it all was because it just felt like numbers on a screen. He didn't feel the weight of his wins until he lost it all. He also says he could have upgraded his car and graduated college debt-free. Now it's a whole new grind. Secure Control 2020 was a saint though and gave him some really sound advice. Just get a $25,000 loan again. Can't happen twice in a row. Thanks for watching. Make sure to like, subscribe, and comment who had the craziest trade.